everybody. Welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, let's do a quick systems check just to make sure that you're hearing me clearly and seeing my screen all right. If you would, type OK in the chat box if everything is working fine for you. Just waiting on a few more responses to make sure everyone's up and running fine. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, great. I've got enough responses. Looks like we're up and running fine. Thank you. As we get going, keep in mind, all trades have risk. No one trade is guaranteed to profit. With each and every trade, there is the risk of loss of the exposed amount on the trade. Now, with that said, each and every trade also has a good potential for profits, which is why we're here, to try and go after those profits in a way that makes sense. Just make sure on the risk management side that you're taking trade sizes that make sense for your risk tolerance, for your balance, etc. And you can use a variety of tools that we offer in terms of stop loss or AvaProtect or other strategies with hedge positions to protect on the downside of trades. Now, keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, real quick, before we get on the live charts, what is fundamental analysis? Basically, it's the news. It's what's happening around the world, whether it's regular economic events like jobs numbers coming out or PPI numbers or CPI numbers, all these different types of economic data that the countries are releasing on the economic schedules. Those types of regular economic events, we'll take a look at some today. It can help you decide which way do you think you want to trade on certain instruments. And the other type of fundamental analysis that we also will take a look at are the extraordinary economic events. Things that are not scheduled, that can't be predicted. There's some news out of China now regarding interest rates and monetary policy that I think was maybe somewhat surprising that the news came out. So these types of extraordinary economic events, obviously everyone's aware of COVID, and that's obviously an extraordinary event that affected the economy. These things you need to keep an eye on, and also prepare for the unknown with that type of event, because you don't know when the next headline might hit or what it might be about. And that's the idea of risk management, stop losses, hedge positions, AvaProtect, all these different ways that you manage your trades and your trade sizes to account for potential breaking news that you don't know what it could be. So a lot of times you have pending orders just waiting for that type of news. You know, oil has reached a high and didn't break above the mid 80s. You know, you could have a pending buy stop up there just in case some news comes that causes oil to go flying up to 100 above the resistance, just waiting for a headline that's unexpected that could disrupt supply of oil or something. Or we could talk about any instrument in that manner, that there could be an unexpected headline. In the past, it was about Brexit and other things, that the headlines would come and the pound would go flying one direction or another. And if you had a pending order in the right spot, it would trip if it broke a certain price level, and you could be in on a really big surge type movement. So even though with the extraordinary economic events, you don't know what they'll be or when they'll be, you can put what I call trip lines in the market with pending orders, just waiting for important price levels to break through with a breakthrough move up or down, and catch the momentum on those types of moves. So we go over all of these types of strategies in the fundamental analysis webinar, and so we're about to get into that now. If you have any questions or input that you'd like to give, pose your questions, give your input in the chat box. I'm happy to address any pertinent questions or share any pertinent information as it relates to what we're talking about. Okay, so real quick, what are the headlines? Let's get a feel for the sentiment. the fundamental news that's coming in right now. And so we can take a look at headlines real quick, like stocks slip in Europe as investors refine Fed hike bets. Okay, slipping a little bit still today after yesterday's bloodbath of a sell-off somewhat because of the fear about when they say Fed hike bets, they're talking about US Fed and the fact that they're promising basically that interest rates will go up with several increases this year. And the reason for that is inflation, they've admitted, is a bit out of control. It's higher than is healthy. And the way to slow inflation down is to remove the inflationary policies that have been in place that were put there because of the pandemic and to help the economy. But now the economy is roaring so much. It's been helped so much with the ultra low interest rates and the stimulus packages, the free money being handed out, et cetera, that now they've helped the economy too much. And the prices are going through the roof on gasoline, on food, on houses, et cetera. And so as prices are growing faster than income, therefore that means the strength of your pound or your euro or your dollar has weakened. That's what inflation means. Prices are rising faster than the value of the currency. And so the way to try and strengthen the currency back and slow inflation down is to raise interest rates back up. That's one way to do it. Also, the bond buying program that the US Feds have been doing to help prop up the economy, they're talking about tapering that down. And so this is what they're talking about when they say stocks slip in Europe as investors refine Fed hike bets. You know, they're refining the bets that, hey, they might increase it 4 times this year, maybe, not just twice, not just 3 times. Maybe they're going to increase it even more than we think and faster than we think. And so that created a lot of fear yesterday, and that looks like it's carrying over into the European session today. But if you take a look just down here, you see that the US futures are green. They're not in the red. There's a little bit of an ease of the fear. And you can see on the volatility index here, these red numbers are yesterday's close. The green numbers are the futures today. So as the US market is nearing open in a few hours, the futures are green. So it looks like a bounce back somewhat so far from yesterday's big drop. And then you look at the volatility index, it's down. Yesterday at this point, it was up 20%, the volatility index. That's a huge climb in fear. The volatility index is a show of how much fear is out there. So the fear index, the volatility index, is not up 20% today like yesterday. It's down 3% from yesterday's close. So it hasn't come all the way back down. You know, it's still up 17% if you go back from where it was the prior close. But from yesterday's close, the fear has eased a little. It's come down 3%. But that shows there's still some nervousness, right? Went up 20%, now it's only down 3%. So overall, it's up for the week, but it looks like some of that fear is easing, and we've got the futures slightly green. Now, you'd say, well, why is that? Here's a headline that helps. China cuts key rates, steps up monetary stimulus to boost economy. The opposite of what most nations are looking to do around the globe. US, European nations, UK, etc., talking about when they are going to increase the rates back up and slow down on some of this stimulus to slow down all of this inflation. And what does China do? They say, hey, they're cutting the key rates. They're going to step up monetary stimulus to boost their economy. So, wow, here come maybe some inflation fears again eventually from this. Right now, you know, Wall Street loves stimulus, so stock market might go up. But also so too could gold with such a headline that obviously the second largest economy in the world, they're talking about cutting key rates when there's already too much inflation to add more monetary stimulus. That could cause some inflationary fears again. Maybe not directly on the US dollar, right? But global inflation fears could kick in again when a major economy is talking about cutting key rates. So it's interesting to see China talking about the opposite of what most nations are talking about trying to do, which is to move to anti-inflationary measures, meaning raising interest rates back up. And here China cuts their rates. Okay. We've got another headline here. Oil prices slipped from 2014 highs. So yesterday, oil was going up to highs and to recent highs, anyways. And now the combination of the U.S. dollar strengthening, which we see it is strengthening a bit today. It strengthened a lot yesterday with all the fears as folks contemplated an increased interest rate in the U.S. Well, then that strengthens the USD, right? People buy the cheap dollar as it is now, expecting it to go up if interest rates will go up. And how do they buy the dollar? Well, they sold their stocks, right? They sold some of these other instruments that dropped yesterday. Oil prices slipped from 2014 highs. Well, it makes sense if the U.S. dollar strengthened, that might help pull oil down and gold and other instruments down as the U.S. dollar looked more attractive. But the supply concerns limited that dropping, meaning oil didn't come flying down because the U.S. dollar strengthened. It came down some. And the reason it didn't come crashing down partly is because of the supply concerns. There's huge demand as the economies have been in hyperinflation mode. There's huge demand for oil and energy. And so that's really helping to prop up oil, even as some of this fear hit yesterday. That's what that headline's telling you. If you're into trading stocks, here's a headline that might interest you. Amazon gains on entry into offline retail of clothing and shoes. So offline stores where you can actually walk in and buy stuff. Talking about using algorithms to determine what you would like and some kind of interesting things. And so Amazon getting into the offline retail of clothing and shoes. So that's something that maybe if you're looking to find a stock today to look for a rebound, bounce back up after all the sell-off yesterday, maybe you check out Amazon, see what's going on. We could take a quick look at the chart, even though it's not moving yet till the U.S. market opens. Here's the other type of fundamental news. The scheduled kind, right? And what do we see? More inflationary, hyperinflationary numbers. German PPI numbers today expected to have 19.4% year-over-year increase in the purchasing price index. And we're talking, it even beat that high estimate. Came in at 24.2% year-over-year increase. That's huge, huge inflation. So it's not just the U.S., it's European Union, it's a major economy like the German economy showing huge inflation. Look at the month-over-month increase. The expectation was 0.8%. It went up over 500% more than that. Over 5% increase in PPI numbers from one month to the next. If you say, well, what's PPI mean? Just click on the thing here and it tells you. Producer price index. If the price of producing things is going up 5% in 1 month, what's that do to the cost in the store eventually then? Okay, you see the producer pricing index is an implication of inflation of prices eventually on the shelves, because they're not going to eat that loss. The producers who are making products, if their prices went up from last month to this month by 5%, then expect the prices on the shelves to go up at least an equal amount. Right? So, and if your income's not growing by 5% from 1 month to the next, it's basically the same as a decrease in pay, right? All of a sudden, you can't buy as much stuff with the same amount of money. And this is the worry. So it's interesting that China would decrease interest rates and increase stimulus right now while all of this is going on with hyperinflation. So now we're looking at what about CPI numbers? Down here, year over year, CPI, consumer pricing index. Look, up 5% year over year. Month over month, up 0.4%. So prices for consumers are climbing. Prices for producers are climbing. And now we come down, what's to come today? An idea of what's going on with existing home sales. The last data we saw regarding permits for new homes in the US, they missed the mark. Why might that be? Prices went up too fast, too much inflation. People can't afford to buy houses as much if the prices go up faster than their income. Okay, this is the problem with too much inflation. Eventually, it catches up with everybody, and things like home sales and car sales and other areas of the economy start to lag because of hyperinflation. So existing home sales, this will be looked at closely today. Okay, the employment numbers, Philly Fed employment numbers, crude oil inventories coming out. All of this is going to either increase the fear today or calm people. There's enough announcements there that with all the fear that was out there yesterday, something that comes in likely could trigger some more fear. So fundamentally, things are on edge, and we've got a lot of data still showing high inflation already out today, and more data to come that could also show high inflation, high demand for oil, housing prices or existing home sales, are they up or down? If existing home sales have dropped below the expectation, that's going to create fear that, wow, the economy is starting to be affected by this inflation. So I expect a lot of movement. And look at this, not to be overlooked. European Central Bank publishes account of monetary policy in less than a couple hours. That's coming soon. And you know, if this monetary policy that's about to be published, released, talks about raising interest rates, trying to kill the inflation, you might see more fear hit the European market and really the global market. Okay, so huge potential here for huge movements today on the markets. Okay, so if you pick your spots either with market moves or pending orders and find the opportunistic entry points with your technical analysis, the fundamental news could drive huge movements today. So you could go after large potential gains with much smaller loss potential on a few different instruments. You only need to hit on one or two of them to make a really nice profit. Okay, Bitcoin might move today. Henry is saying, yeah, I think after all the huge dropping with a little bit of positive sentiment on the market, I've already seen some of the coins starting to bounce. But you got to watch out for the increased fear and a continued drop as well. So for sure, you're going to see a lot of movement in Bitcoin and these cryptocurrencies as the high fear or the fear easing kicks in. So you just got to pick your price points that you like and limit your losses in the way that makes sense for you. And the profit potential when the market conditions are like they are now, it's huge opportunity for large profits, and you limit your risk with your risk management plan. And speaking of that, let's talk about how can we use the AvaTrade Go app or the web trader to help you with your risk management plan as you apply the fundamental news into your trading today. So if I expand the view here of my phone, we can take a look at the AvaTrade Go app. All right, and some unique features would be if I want to tap on this little tab down here, I scroll through this menu, and what I see are some market buzz ideas for stocks that might move. If I tap on market buzz, then it brings up the most recent articles on different stocks that we offer. And so you see there are 381 new information coming in on Microsoft. So if we say, okay, let's tap on Microsoft. So I tap on Microsoft and it brings up the most recent articles and a little breakdown of the expected movement and what's happening there. And if I scroll down, we see the most recent articles 19 minutes ago. This article comes in, the top 3 blue chip stocks to bank on long term. Obviously, Microsoft must be mentioned in there or else that article wouldn't be here. So you could tap on that article. Or Sony expects Microsoft to continue to ensure Activision games. Microsoft's talking about buying out a big gaming partner or a big gaming company and getting into the gaming industry, more so than if they already are. So you could click on that and read. That was just 28 minutes ago. So if you tap on the article, it brings up the article for you. So you could find real quick, without having to just search the internet randomly, you can find real quick with these tools on the web trader and the app some fundamental news that will alert you to, okay, what stocks might I want to trade on? And then if it's a European stock, hey, it's already market's open. If it's a US stock, you're waiting for the market to open and checking the price points and seeing if you have a spot that you would want to get in based on what you just read. Okay, so those articles are most recent on top, and as you scroll down, they're a little bit older, but doesn't mean the older ones aren't good either. You see, it was 19 minutes ago, 25 minutes ago, 1 hour ago, etc. as you scroll down. Now, what about if you already understand the fundamentals of the direction you want to trade, but you want a little help with your technical analysis? So in that case, I can, instead of doing Market Buzz, I can click on Featured Ideas or Analyst Views, which gives us signals in terms of the technical analysis, a breakdown of the price levels and what direction a particular instrument is expected to move. Okay, so USD Canadian intraday under pressure expected to drop according to this signal. And you'd say, well, wait a minute, wasn't the US dollar strengthening yesterday with all the increased interest rate fears? And you say, yes, it was. So this must be a correction that's expected. We see the market's green today. The US dollar is maybe not strengthening as much as it did yesterday. And the talk about oil prices staying strong and being high, that helps the Canadian dollar typically, because the #1 export of Canada is crude oil. It's like the largest part of their GDP is crude oil exports. And so many times a strong oil price leads to a somewhat strong Canadian dollar. Not always, but there is a correlation there. So if you say, okay, I like that signal fundamentally, I understand why it might drop. So then now I can look at the technical breakdown. So I say, okay, it gives me the price level. It says the preferred trade is a short position, meaning selling, below 125.20. Here's 125.20. What it's saying is if this went up and broke above 125.20, then the signal's no good for the sell. That's what they're saying. It means it should not break above that price if the signal is correct. So if you went and looked at the USD Canadian chart and it was up here, then they're saying, okay, this signal's no good anymore, because it shouldn't break this resistance level. You see, it's resistance. It shouldn't come up and break through the resistance if the momentum truly is down. That's what they're telling you here. So they're saying as long as it's still below 125.20, this blue line, then you can sell with targets as low as 124.60 or 124.45. If you look at the chart and it already dropped to these red lines, well, then the signal's done. It already reached those prices. If you look and it's somewhere like where it's showing now, somewhere between the blue line and here, then that means that signal's still valid for selling with take profits down near these red lines. And then it gives you an alternate scenario. The alternate scenario is if it goes above that blue line, then buy. So if it does go up and break above this resistance, they're saying now buy, because the momentum is showing an uptrend if it breaks this resistance. So they're saying if it goes above this line and it hasn't reached the green lines, which would be the take profits on a buy, then you can buy. So what you could do right now, if you trust the signal, you could do a market sell if it's within this range, with take profits down here. That's going with the fundamental news as we know it. Strong Canadian maybe because oil prices are high. The fear seems to be easing today, so the USD then might give back some of the strengthening that it had yesterday. So fundamentally, it seems to make sense for the near term, at least before those announcements come later today. But you also could have a pending order up here, a buy stop pending order. A pending order that says buy if the price goes to 125, let's say 125.25, meaning if it goes up and breaks this resistance, then buy. Okay, so at the same time you could sell with this signal, with the preferred direction. You could have a pending order up here to buy in case it goes bad on the first move. That's the idea of these signals, to tell you, listen, based on the current news, the current fundamental news, and the current price levels with the technical analysis, this is a sell right now. But they're also saying, listen, there's that other type of fundamental news that could hit, the unexpected kind that could change the momentum. And if the momentum shows that it breaks above this line, then it's saying this is the alternate move. Have your pending order up there ready to go. That's how you interpret these signals. Okay, so these features are here for you to make your trading easier, to save you time. And you don't just blindly follow the signals necessarily. You do the fundamental analysis like we just did, when we first got started, and then you pick the signals that make sense to you, okay? And really, they should all make sense. Otherwise, why was the signal sent out? But you obviously individually pick and choose the ones you like, or the ones you like the best. And there are other features. We'll look at it on the web trader also. So let me get rid of my phone sharing. And let's take a look then at the web trader, which you access by logging in right here. Okay, you just log in from the main website and you're in the web trader. And again, our app that I just showed you and the web trader are trading right on top of your MT4 and MT5 accounts, your demo accounts, your live accounts. You can switch accounts right here. Accounts, you see, live, demo. I can switch between my accounts, even if I had one MT4 account, one MT5 account, whatever the case may be. I can switch and trade on all of those accounts right from the web trader, right from AvaTrade Go. And why might you do that? Because it has these advanced features that you can look at. Everything we were just looking at, those Trading Central features, market buzz with the stocks, analyst views, and Forex featured ideas with the Forex signals and the cryptocurrency signals, they're all here, okay? On the live accounts, all of those are active. I think on demos now too, they may be active in some regions. So what we're looking at then is the fundamental news we understand. We looked at it. We think we understand it, right? So as we understand the fundamental news, what might we want to trade on? So we take a look at something like gold. Because gold is an inflationary safe haven, and we've got all this talk about inflationary fears and easing of policies and all of this that affect inflation fears. Let's take a look at what gold is doing. And we see over the past 24 hours, these are 1 hour candles, gold went flying up. Why would gold go up when there was so much fear? Well, I can tell you one reason. China's talking about, or did already, cutting their interest rate, adding more stimulus. Well, up goes gold as a safe haven for the inflation. And all those announcements that came out today also show a lot of inflation around the world, or many of the announcements anyways that we looked at out of the European Union, etc. And now there's more announcements coming out of the US later. Up went gold. Okay, it makes sense fundamentally what happened here. Okay, so let's look at the bigger picture then. 4 hour candles. You see gold came flying up through some resistance levels on the 4 hour candles. Let's go to 1 day candles. Let's get a better view. Okay, I see a resistance level on the 1 day candles forming. Let's go to, you see here, wick and down, wick and down. It didn't break yesterday's high. Okay, it looks like it's trying to come down. If there are renewed fears, like we saw yesterday with the USD rapidly strengthening and the market selling off, if there are renewed fears today with the European monetary policy information that'll be coming out soon, if there are renewed fears with the housing industry numbers coming out in the US, etc., then we could see the US dollar rapidly strengthen again. Because that would increase the likelihood that, hey, if we have all these problems still with inflation, interest rates, yeah, okay, more fear about interest rates going up again, USD could strengthen and down goes gold. So maybe you see it as opportunistic that, okay, in an environment where everyone's focused now, maybe except China, on getting rid of the hyperinflation, in that environment, the bigger picture is maybe gold should go down, fundamentally speaking, because gold went up because of all of the hyperinflation. If measures now by most nations are going to be taken to try and counteract inflation, then that gives reason to sell gold if the expectation is the currencies could strengthen back up now. So let's go on that premise that you think bigger picture, maybe gold should drop. So then you say, okay, let's take advantage of this spike that maybe China caused with their decreased interest rate, and maybe this is a nice price point to sell from. In which case you say, okay, I'll do a market sell maybe. I could put Ava Protect on this. Let's do this. Let me protect this move for 2 days. That gets me through today's announcements. That gets me through tomorrow, any information that might come out. And depending on my trade size, it's not going to cost me much. So where would my take profit be on this move? Let's say it comes down near yesterday's low. So right there, here's yesterday's low. The wick hit right there on the 1-day candle and then went back up. So the take profit just before yesterday's low. So we're not even asking so much here to go down to, let's say, 1811, 1812. Let's call it 1812. Okay. So if we put take profit 1812, the protection for 2 days is costing me $44. That comes out right at the beginning when I open the trade. That's bye-bye. You wave bye-bye to the premium. You paid for the protection. But now you get the benefit to sit risk-free for 2 full days until this expiry day and time to see if gold indeed will come down and hit your take profit. And if it goes flying the wrong way, it doesn't matter, by $100 an ounce the wrong way, during the covered period, you don't lose anything more. When the covered period ends, any negative floating from that trade, or if you got stopped out, the trade closed automatically, any negative from that trade that you lost during the protected time period is added back to your account. Now you can re-enter from that better price and sell again in this example with limited risk again. And you only need to be right once when your potential profit is so much more than what your risk is. We're talking over 3 times more, or about 3 times more, I should say, potential profit to risk in this setup. So then I say, well, how much am I willing to risk? Let's say I'm willing to risk, I don't know, 500 per trade. Maybe I have a balance of 50,000. I'm willing to risk 1% per trade. So I say, okay, 500. I'm willing to risk. So now the risk management tools here help you calculate your risk. So I can see if I do a quarter of a lot, the premium costs me $221. Okay, if I'm willing to risk 500, so let's go half a lot. I see the premium is still less than 500. So now I go 0.6, 0.55. There, I'm right near 500. For 2 days, my risk is capped at the cost of the premium, and my potential profit is near 1,500. Okay, about 3-to-1 ratio. If I like that setup, and by the way, I wanted to sell here, not buy. With what we're talking about, let me click on sell. AvaProtect on 2 days, and we did 0.5. 0.7, 0.56 lots. Okay, about 500 risk. Take profit. Let me redo that down here at 1812. Okay, there we are. So potential profit, 3 times the risk approximately, give or take. And my risk is capped at the amount during this protected time period that I'm willing to risk per trade. And why am I doing that? Fundamentally, it seems that over the next day or two, if fear kicks back in about increased interest rates because of all of the hyperinflation, you likely could then see the US dollar strengthen and help pull gold down. Okay, that's the fundamental idea behind this. And the technical analysis is also nice because the resistance level is close, and the take profit support level is further away. So before it reaches a major support level, you could make about 3 times the profit than what you have to risk if it breaks past here, if you were doing without AvaProtect. If I didn't put AvaProtect, I'd probably put my stop loss right above the resistance up here. That's another avenue that you could take. You don't have to use AvaProtect. Good question. The question is, if you put 2 days protection, but the take profit or the stop loss is reached within 1 day, let's say, do you still pay for the 2 days of protection? The answer is yes. You pay for the protection up front, and once you open the trade, that's paid for. Now, if you hit your take profit in the next 5 minutes, well, great. You just made 3 times, in this example, about 3 times what you paid for the premium. And maybe you'd say, wow, I didn't need 2 days protection. If you think the movement will occur with today's announcements, that one way or another, It's either going to go against you or for you in a big way, and you think that'll happen today with today's announcements, then only put 1-day protection to get through today's announcements, and you'll pay a little less for the protection. What you'll see, it's not linear though. When we're looking at the cost of the protection, going from 1 day to 2 days doesn't double the cost of the protection. It's actually a small increase. So let me bring up gold again. And if I'm putting that same similar type trade size, and I'm looking at AvaProtect, from 1 hour to 2 hours, look, when you go from 3 hours to 6 hours, it goes from 215 to 240. So I doubled the protection time period, but the cost only went up a fraction. And when I go from 1 day to 2 days, it goes from costing 403 to costing 498. So I doubled my protection time and it only went up by less than 100. So it might be worth it to give yourself a longer time period. Good question. Do you need to put a stop loss when you have AvaProtect? And the answer is no. You don't have to, but I would keep an eye if this trade is still running when the protection ends. Then go back in. Be cognizant of the expiration date and time of the protection, because once that protection ends, any negative floating's added to your account, but the trade keeps running. Now, if you don't add a stop loss or some other risk management, you're unprotected in that way. So eventually you might add a stop loss onto the trade. Maybe you don't have it during the covered period because you don't want to get stopped out in the first 4 hours. And then in the next day or two, it went running the right way for you. And you say, why did I put a stop loss when I had protection? I could have waited it out. That's the benefit of the protection. You can go flying the wrong way and then come back the right way. And you don't have a stop out or stop loss problem because you had the protection, didn't have to put a stop loss. We've all had that happen probably. Put the stop loss too close, it goes up, hits your stop loss, then it goes the right way. And you say, wow, if I would have had my stop loss further away. But in this case, you don't have to put your stop loss further away. You just put the protection. And you don't have to have the stop loss during the protected period. Good, very good questions. Okay, so we simulated a market move with gold, partly based on the fundamental situation and also partly based on that technical analysis that we just did where the 1-day candles kind of formed a resistance level. So we've got a limited risk with AvaProtect, a much larger potential profit if the fear hits later today. I think we could see gold continue to creep up a little right now. And then when those announcements come, look out. We'll see which direction, and especially when the US market opens, what direction does all that volume, increased volume of trading when the US market kicks in, what direction does that push gold? Okay, so this is a longer term move with that 2 days protection. I wouldn't stare at it in the first 5 minutes and say, oh, it's going the wrong way. It's a longer term move with a measured risk. Okay, very cool features. You don't see these features if you log directly in and place your trade from the MT4, MT5. You're not going to be able to put these types of risk management features on your trades. Let's look at maybe an indice like the US 500, something like that, and see what's going on with that. Let me just type 500. It has an underscore. You have to put the underscore. US 500. US underscore 500. Okay, so, but very simple to search with this platform as well. Just put something that's in the name and up it comes. So 500 was enough. Now, if we take a look at this chart, these are 4-hour candles, and we see it's turned into a bit of a bearish market here. And so we need larger candles to be able to get an idea. Is there a support level down here someplace with all this dropping? Because we see on the 4-hour candles broken support right there, broken support up here. Okay, this was a support level. It got broken, bounced off of here, kind of seesawed around this price level. This was an area of support and resistance that it couldn't decide what to do. And then down it went from that support level, and it broke this low point, went right through it, bounced around that level, and broke below it again. And now here we are. So if the market's coming up pre-US market right now on the 4-hour candles, which we see climbing, where's the first resistance level where you might sell from if you expect renewed fear after yesterday's sell-off? Because boy, that was a lot of fear yesterday. I don't know how that just disappears overnight. So yeah, okay, things are a little calm right now. Volatility index was down 3% or so when we looked at it. But don't forget, that means it's still up 17% because it was up 20% yesterday. And if it's only come down 3% from yesterday's close, it's still up 17% or so this week, right? So fear is still there, even though today it's cooling a little bit, but it seems like it's maybe simmering because we didn't see a 15% drop on the volatility index to get back to where it was before the big rise. We just saw a little pullback in volatility, 3% when we looked at it a while ago. So this is that decrease in the volatility index. That means indices are rising slightly. It's a pullback. But look, here's the resistance level right here. Here's the resistance level. So if you expect potential renewed fear today, fundamentally, and with so many important announcements still to come, probably something in there, someone will find a reason to be fearful. That's my guess, okay? It's not financial advisement. That's my guess. That's my feeling. So I feel like it's a market where I want to find the right price point to short it right now. Fundamentally speaking, that's what the fundamentals are telling me. So you might put a pending order if you want to short the market. I'm not saying you should. If you feel the way I feel, if you want to short the market, here's a spot that a pending order might make sense. Just before this resistance, this old support that should act as resistance now that it was broken, just before that, so just below that support level right there might be a spot for a pending order to sell. So if the market can come up and reach that spot, 45.66, we could say execute when price hits. Let's go to sell. Execute when price hits. Should say if price hits. There's no guarantee it'll hit our price, but 45.66 is a spot that the technical analysis says might make sense. Okay, so if it hits 45.66, then it'll sell because I have sell chosen. If I had buy chosen and I put execute when price hits, then it would buy when it hits that price. You notice when we use the web trader and AvaTrade Go for pending orders, we don't have to say buy stop, sell stop, buy limit, sell limit. You don't need all that technical jargon like you do in the MetaTrader platform. You just tell it the price that you want it to buy or sell from. You'll see if you log into your MetaTrader platform, it's the right type of pending order. In this case, if I say to sell from this price, which is a higher price, it's going to make it a sell limit pending order. You don't have to know the technical names with our platform, okay? So you just put the price you want to sell from, there it is. Take profit in relation to that entry point, could be just before this low point. So if it sells from up here, you might take profit before this support level, which is around 45, let's say 75. That would be just above that support level. So take profit 45.75 to get out before the support level. Stop loss then from this entry point, the stop loss could be just above that support level. So if this is the price level that you think it'll hit and drop from, then you can put your stop loss just up here. Okay, so let's create a new line and say stop loss at 46.70. If it breaks this resistance, then we might say, okay, we're wrong. We're wrong. It broke the resistance. It didn't drop from this resistance level. If it breaks through, then stop loss somewhere up here could make sense. If you're more patient, you can put your stop loss higher. It's up to you on your risk strategy. But to have your stop loss here, it would at least have to break the resistance level with some momentum, which means maybe those announcements went the other way, went in a positive manner, and so you get out with a small risk. So stop loss then we could put at 46.70, 46.72, something like that. 46.72. Okay. Now we look and we say, oh, this should have been on. This should be 46. I had a mistype. Okay, 46. $56. There we are. All right, so what we're looking at then is 46.56 to get in right here. Now that I typed the number correctly, Stop loss up here at 46.72 or so, and take profit down here at 45.75 or so. Okay, so now we see potential profit 81, possible loss only 16. Okay, so now I say, okay, if I want to risk 500, if that's the amount I said I want to risk, or whatever amount you want to risk, now I change the trade size. Here, that's going to risk 400. Let's go 3, 0. That would risk 480, 0.33, 0.32, 0.31 is my magic number. Now you see I'm risking possible loss 496, right around my 500 number that I'm making up that maybe I want to risk per trade, and my possible profit 2,511. That's it. Sell. Okay. Now that's not a market move, that's a pending order. So you see over here, it's listed as an order, not a position. It only moves to the positions if the price is reached and it opens. Okay. So if this goes up and hits this price level up here, then I'm sorry, up here. It's this price level up here, the resistance level, then it sells. And then the stop loss is just above if it breaks through. The take profit is down here if it pushes back down. Mendert, I'm reading your comment. You said that I was spot on with the execution price and take profit on the US 500 on Tuesday's webinar. Yeah, a couple of our positions turned out really well. I don't remember if that was a market move or a pending order, but we set up a number of options, and yeah, sometimes those turn out well. And what's nice is if you're setting it up like we are today, you only need to win 1 out of 3, and you'll have an overall profit. You only need 1 of them when your technical analysis is giving you small risk and larger potential profit. You only need 1 of them to come through. That, by the way, it's not the only way to do it. I could put my stop loss equidistant to my take profit if I want, or further away. And I could say, I'll put my stop loss above this resistance level. Now, if it breaks through 1 and then goes back the same way, the right way, I still profit. So there's a benefit to having larger risk. You don't hit your stop loss as quick, and you could stay with it longer, and maybe it's more likely to come down and hit your take profit that way. So it's up to you, the strategy that you want to employ with the risk management. If you do have your stop loss further away, then obviously you have to take a smaller trade to risk the same amount, and then your potential profit is less. So it's a give and take with risk reward. With this setup, we're putting the stop loss closer so we can take a larger trade and still have the small risk. Okay, different ways to go about it. And by the way, we can look at the smaller candles and say, there's a resistance level on the smaller candles as well. This is our take profit trade on the pending order, the take profit level. So the pending order, we're taking profit here, 46.75. That's only if this goes up and hits our entry price way up at the top, up here. On the shorter term candles, we could say, you know what, I'll do a market sell, and I'll put my stop loss above this resistance level on the smaller candles. I think it's a bit riskier. I think there's likely it could come up and break this small resistance level. I say small because it's on 15-minute candles, but it doesn't mean you can't scalp on the smaller candles and say, okay, I'll sell on this and put my stop loss just right up here and put a take profit down at the low it already hit earlier today or yesterday. So in the smaller time frames, it's more of a true scalp on small movements. But I don't like the fundamentals on this move right now because fear is down before these announcements are coming out right now. Fear has been dropping. And so the fundamentals right now are showing that this could come up and challenge this resistance level right now. Good question. Why can't you use AvaProtect on a pending order? And the answer is because we don't know what the price of the protection will be. As market conditions change, the price changes. And we don't want you to get in a situation where on a pending order, volatility went through the roof. And so the cost of the protection went higher than you expected. And when the trade executes, you get charged a higher price maybe than what you thought you were going to. And you say, hey, well, I didn't approve that. It gets a little tricky with the protection because the price of the protection can go up or down based on market conditions. And so it's, for now anyways, we feel more comfortable offering the product only on manual executions. It's possible sometime in the future we could visit the idea as a company that maybe we could put the protection on pending orders, and you just have to maybe check a box that you understand the cost of the protection could change. But for now, we don't offer it on pending orders. It's a good question. Okay, everybody. So I think we get the idea here. We're almost an hour into the session, so I don't want to hold up any more time. But right now we see the fundamental situation. Huge fear yesterday, a little calming effect today, which brought gold back up. It brought some of the major indices back up. US dollar is not strengthening like it did yesterday, but we see the potential for huge fear coming back because there are really big announcements today. All right, so right now you're looking at a bounce in the market from after yesterday's drop on many of these instruments. You might be able to take advantage of that bounce with a potential further drop if that's what you feel will happen, because the bounce gives you a nicer price point than selling from where it was yesterday before it bounced up today. If you feel that fear will just disappear today and the market will just go flying up as a big correction, you could put some pending orders to do that as well, right? If we could short the 500, but also put a pending order to buy, like here. We could say if this movement breaks this resistance level on the smaller candles, then have a buy position up here to buy. It's no problem. You can trade both directions. You don't have to try and guess the market and be right. Put trip lines in the market in spots that just in case the market goes flying up, put a pending order above the resistance level on the instrument you think could go flying up. Could be oil, could be gold, could be any of these instruments, and just take advantage of the fact that there's big news coming and a pending order even in the opposite direction. Remember, we said there can be unexpected news. Place those trip lines. Trade with what you know, which is kind of what we did with our moves so far in the webinar. Prepare for the unknown with some pending orders in the opposite direction than what you think it'll go right now, beyond the important price levels that you see. All right, everybody, thank you for joining. We'll be back at it next week on Tuesday evening, 6 p.m. UK time. Okay? All right, good luck with your trading. Bye for now.